We are live. Hi, guys. Chris here, and I'm with my friend John Aman. John is also our CFO, and he is going to be talking to us today about money from the federal government. John, welcome.
Yes. Thank you, Chris. Appreciate it. Thanks for the chance for the audience, and I hope this is informative for some people.
Money from the federal government never happens. It's always money to the federal government in way of taxes.
Yes, and in this case, though, you won't have to pay it back if you meet certain criteria. So it's a good deal.
Cool. So I wanted to make sure that we're sharing with our folks today what programs are available. We'll talk a little bit about your experience and expertise in this. And I know there's going to be a lot of folks joining us that are going to be real estate focused individuals. So how could the opportunities that are being presented right now with these SBA loans and grants and things that are coming, how could they impact and hopefully help accelerate their businesses moving forward? So this isn't just for real estate focused people. This could be helpful for all small business owners that are out there, especially ones who are really having some difficulties during the times that we're in now. So wanted to set that context to move forward, and we'll jump right in.
All right. Sounds
good. So John,
Chris.
this is your presentation that you put together for, I know, groups that you're talking with. And so I'm going to let you go ahead and turn it over to you to talk through it, and I'll jump in if there's any questions. If you guys are watching this and have any questions or want us to hit anything specifically, feel free to post a comment. I am getting those. I can see them on my end, and I can ask John those as we're moving through.
All right. Thanks, Chris.
John, do you want to talk a little bit about yeah, go ahead. Start with your experience, and we'll roll right in.
Yeah, sounds good. So as Chris said, I'm John Aman, and I'm a partner in a firm called PVV CFO. We're a firm of about 200 people around the country, originally formed in Mesa, Arizona about 30 years ago by an Arthur Anderson director who felt as though the middle market and lower middle market business owner wasn't being well served by, in those days, big 8 accounting firms. And we've grown over the years to what we are today. My background is over 30 years in finance, accounting, controllership, and marketing. My little story is in this real estate space, my best friend's father built and owned a successful real estate firm in my hometown. And as he grew older, one of the things they didn't do is plan very well for what the transition would be. And when he was in his mid-70s, another broker offered him, made an offer to him to buy his firm. The problem is they didn't know whether to accept it or not, didn't know whether it was the right price, and ultimately decided not to sell. And a number of years go by, and he passes away. And they still hadn't sold. And you guys understand the real estate business far better than I do, but without proper planning and transfer, there's not a lot of value to sell in a real estate firm when it's not executed at the right time. And so what I do is help businesses plan for short-term and long-term opportunities. In that case, would have been a long-term opportunity. But in most cases, I'm helping folks like Chris and Kelly and others just plan the next 12 to 36 months and how to move forward there. So that's a little bit about me, but that's not why we're here today. So why don't we dig in and go to the next slide, Chris, and we'll start talking about the government program.
We'll do that. Yeah, we'll do that in a second, but I do wanted to, while you were talking about that, I wanted to interject real quick and just share a little bit about our experience. And we brought John in about 1.5 years ago, and I'll tell you, we have a company with World Class that's been around 16 years, and it was one of the best investments we made in our organization to be able to look at how historically money has come in and flowed through our businesses, and what to be prepared for and what to get in place for what was going to be coming next. So I just wanted to let everyone know the importance of having a solution like you provide for business owners. And so we'll keep jumping in. You know me, I do like to interrupt as things come up. So I may throw you off or throw you a curveball as we go.
Well, I'm happy to take them, and it'll be better than my monologue. So please do so. The federal government has, on the right hand of this page is their standard 7A program. The main thing I want to say about the 7A program with the Small Business Administration, the SBA, is that if you have a 7A loan right now, or plan on getting one in the next few months, the next 6 months of payments are forgiven, wiped out, not due. They're not being added at the end of the loan. They're not being added to the balance and spread across the life of the loan. They are forgiving 6 months of money due. So that's supposed to be automatic. That means if you're on automatic withdrawal, any draw in the last 2 weeks or the next 2 weeks, you should be able to look at your statement and see it wasn't made or won't be made. If it does get made, contact your bank or the SBA directly and ask them why it was, because they're supposed to do this automatically without asking. But proactive people will make the phone call or send the note anyway and just say, hey, I just want to confirm this applies to me too. And I'm going to encourage anybody that has a 7A loan that I know to do just that. Make the call or send the note. The middle column is known as the EIDL, the Economic Disaster Loan. Right now, the government's put about $10 billion into this program. It's very similar to if we'd had a hurricane or a tornado blow through and a natural disaster is declared. Right now, the application is only available through the SBA, and it's issuing right now grants up to $10,000 and possibly an additional $15,000 on top of that as an emergency loan. The $10,000 is in $1,000 increments based upon number of employees. So 10 or more employees would get you the full $10,000 grant. The grant portion is not required to be paid back. Anything over the $10,000 in a loan is just that. It is a loan. It's paid at, or what's due interest wise is 3 3/4%, up to 30 years. It will not be forgiven, but first payments are delayed for 6 months or so. I'm only aware of
John, who is
yes.
Who for the economic disaster loan? Like what's a good example of a business that would want to apply for something like that right now?
That's a good question. I think number one, any business, particularly that doesn't have a lot of employees but has expenses to cover, because what we're going to get to in the Paycheck Protection Program, 1099 personnel do not count. So if a lot of your personnel are 1099s, you can't put a whole lot of money down on the PPP application. So I would be using the EIDL for what many businesses will use the Paycheck Protection Program for. You can use both programs for the same thing, but you can't use it for the same thing from the same business. So in other words, you can't double dip for payroll. If you're going to apply for payroll on the Paycheck Protection, you don't use payroll as your purpose on the EIDL. But if you have payables that you want to get current or stay current on, the EIDL is a good vehicle for that. If your landlord isn't going to allow you to defer rent, it's going to be a good purpose for that. It's also right now, cash is king. So putting some money in the bank, even if you don't know exactly what you use it for today, it's a good application to fill out and complete. It is one you can go back to the well multiple times on. So you can get it started, get the $10,000. You find that you need more money, you go back, amend your application, and so forth. It's not a one and done program, where the Paycheck Protection Program right now is a one and done program.
Got it. Cool.
So if we go to the Paycheck Protection Program, it is what it sounds like. The purpose of this particular program is the government wants people on your payroll instead of on unemployment. They are stating altruistically, the reason is that when the economy starts rolling again, it's much easier for you to put your talented people back in place on the job if you've been paying them than if you've released them in a layoff situation and they start collecting unemployment. The key is you do have, if it's going to be forgiven, you do have to start paying them again, even if they cannot come to work. And that's one of the things that bothers some people about the program is that, so you're telling me that I need to pay people even though they're going to stay home and do nothing for me. And that is essentially exactly right. Now, the alternative is there are many businesses that are still working, but their revenue is curtailed significantly. And this helps them as well because it doesn't say you have to have no money to pay payroll. It just says that this money is available for payroll. Mm-hmm. And so it's also available for paying group health benefits, mortgage interest, rent, and utilities. The application is very basic. It's a single page. It's going to ask you for 2.5 times your average monthly payroll from last year. If you're a new business, there's some other rules to apply that we could get into on a one-on-one exchange in email or on the phone, or just talking to your own financial advisor. It does have a $10 million limit. And there's, if it's, well, term, first of all, no payments for 6 months on the principal. The interest is accruing though. If you apply, get the money, and adhere to the forgiveness rules, then you won't have any payments to make on the principal. If you don't have all of it forgiven, what is remaining in a balance is a 2-year loan at 1%, which is almost free money compared to any other loan you would get. Mm-hmm. As I have on the page, it's a fixed 1%. There is no collateral requirement, no personal guarantees to be made, but that doesn't mean the government's not going to request forms, and we'll look at, and information. We'll look at that in a moment. It can all be forgiven under certain situations, and they are trying to put information out about what is required for that, and I have a slide on that too in a little bit. And then qualifications. The main one is less than 500 employees, unless you're a franchisee or franchise, and then there are exceptions to that. If you are multiple companies with common ownership, it's the roll-up to get you to 500 employees. It's not each standalone entity. There are special allowances for startups and some other categories like franchises, like I mentioned. Chris, anything you want to add or ask?
No, I mean, this PPP is the one that everyone is hearing about in the news. This is the big program that the government has just put the, $350 billion into, and they're, I think, talking about doing another $250 billion. So this is the one that the banks are struggling to keep up with the inbound activity on. And this is the one that everybody's trying to get. That's
right. If you look at the money spread across these, they put $10 billion into the EIDL. They put almost $350 billion into the Paycheck Protection Program. That's pretty clear that multiple says that, 350 times more money in the Paycheck Protection Program. That's where they want people to be making their application.
Yeah.
Cool. So As we go to this slide, I will say last night the Treasury Secretary announced that they have already over 800,000 applications and $210 billion approved. From a volume standpoint, the money they put into this program is 10 times more than they do in an annually anyway. So it's a huge demand on them from a time and volume standpoint. So we all need to be a little patient with them and the banks that are taking these applications. All right, the loan amount is equal to 2.5 times your average payroll. And payroll is salary, wages, commissions, cash tips. If you're a company that pays vacations separately from just having it in payroll, then you get to add that, as well as if you pay parental or family medical or sick leave separately, then you get to add those. Now, if they're simply built into salary, you don't get to double count them. They're part of your salary line. The payment of group health benefits, payment of retirement benefits, and then if you're in a state that actually works like the federal government, where there's an employer portion of state income tax and an employee portion of state income tax, then you get to count the employer part. The employee part is in your gross salary, so you don't need to break it out. It's already in there. And the same with the employee portion of federal taxes as well. It's in their salary. You don't need to break it out. If anybody in the company, including owners, makes more than $100,000, then the salary portion, the cash portion of compensation is capped at $100,000. But the non-cash portion of compensation can be added on top of the $100,000. So retirement benefit contributions, health benefit contributions, those things can be added on top of the $100,000. The people that go into the calculation have to be people that work in the United States as well.
So if I have a business, and let's say that business last year made $1.2 million. So each month it made $100,000 on average. The loan amount will be based on that 100,000 times 2.5. So $250,000. Is that kind of how the math works?
Are we talking about the the payroll was $1 million, or
the payroll, the payroll expenses, what we're talking about with the Paycheck Protection. So let's just, for simple math.
Now, what'll happen is you'll look at that. Say you have 10 people that go into that $1 million, right? And one of them made $120,000, and the rest of them averaged $90,000. Mm-hmm. You have to cap the person made 120 at 100. Everybody else stays at what their salary number was. So the main thing is you go through, create the spreadsheet, or just a simple adjustment. You have your total salary for last year. You back out anything that was over $100,000 cash compensation for any individual. That becomes your net annual total. Divide that by 12, multiply by 2.5, and you have your position on cash compensation, and then you can add your benefit costs and retirement costs.
What about if you were, say you were a realtor and you had a small team, maybe you have 3 or 4 agents. Now, most of them are going to be, fairly heavy commission based. Mm-hmm. Would that apply as well? Same thing if the realtor was actually one of the ones that was getting that commission salary. So would they could use that in a similar way?
Yeah. So that depends upon the structure. So if the realtor has them on a W-2, and that W-2 is variable comp driven by commission, then they use that payroll amount capped at $100,000 per salesperson. If they are actually 1099 their commission instead of run as a W-2 commission, then they cannot include it, and the salesperson themselves will apply for their own PPP from the government. That way the government is trying to prevent double dipping on the same salary dollars.
So they're considered their own business, right? Because they're 1099, they probably have their own LLC. They're considered their own business. So they would have to do their own individual PPP loan.
That's right. That's right.
Cool.
Our relationship, Chris, is I'm a 1099 contractor, right? So if I want to participate, I have to do it myself through the bank.
Right. Got it. Cool. Okay. I think that's clear.
Okay. The one other nuance is some companies will pay a base salary to their salespeople on a W-2, and then the commission variable comp is a 1099 payment. Mm-hmm. They can include the W-2 wages in the business application, but the portion in our 1099 compensation, the individual has to make their own application for.
Got it. Okay. Oops.
All right. So did we skip a page, or is this the next one?
This is the next one.
All right. So the loan forgiveness program right now, this is the best guess we have, because the federal government has put out guidelines as far as how it would be forgiven, but they actually haven't written the rules and provided the application. You're going to apply to the bank for the payroll protection, and then you're going to apply to the same bank for that payroll protection money to be forgiven. And it's going to be an application, just like the application to get the money in the first place was. The rules in general are that if you've put it towards 8 weeks worth of payroll, and no more than 25% has gone to the other categories that are allowed, mortgage, interest, rent, utilities, and there might have been another category in there. Because this is oriented towards payroll protection, they're probably going to cap your payments to those other pieces at 25%. That's what we're hearing anyway. So if you end up if your payroll goes to a point where it's not at least 75% of those total payments, then some of it won't be forgiven. The other piece to this is the couple bullets towards the bottom of the page. They're going to pay attention to average numbers. So average number of FTE and or headcount and average payroll. They're not going to track on individual Social Security numbers. At least we don't believe they will. We don't think this program has enough programming and technology behind it at the moment to be able to really do a full-fledged audit like that. But the banks are the ones that are going to make the same determination as to whether you're approved for forgiveness as they were the ones that decided whether you're approved for the money in the first place. And they're going to be rather conservative, I believe, because the government can leave them on the hook for approving forgiveness for things that shouldn't be forgiven. So I would expect more documentation on the forgiveness side than what you may have been expected to provide or asked to provide on the way into the program. Bottom line, if you decide not to bring people back and just take the money, it's going to turn into a loan. If you bring back as many people and pay them nearly as much, doesn't have to be the same amount, but nearly as much as they were making before, I think the rules are at least 75% of what their salary was before, dating back to where it was on February 15th of this year, then the likelihood of the money being fully forgiven is high. If you try to play games with this, then you're running the risk of a very low interest loan. Now remember, it's a very low interest loan. It does need to be paid back within 2 years though, which means either you pay it back in 2 years out of cash flow, or you go get another loan at a much higher interest rate to pay it back.
Cool. But it's not, you aren't personally signing for it though, correct?
Well, they're not turning back to other assets or to your personal wealth as part of the underwriting process. But if it becomes a loan, you are going to have to pay it back, and the business is what's obligated to it.
Okay.
Right now, the PPP loans are only available through banks and credit unions that are approved SBA lenders. And not all of them initially were participating. One of the reasons, or the primary reason, a bank would have chosen not to participate was they weren't clear on what the rules were, because this all came together very quickly, just like the pandemic itself did. And the banks were issuing, they're basically a cash advance from the bank, with the government promising to make the bank whole over time. And what the banks were basically telling the government was, we have capital ceiling requirements, and if we put too much money out in these cash advances, we're going to be in violation of your rules, and therefore, until you give us financial relief or become more flexible in your rules, there's only so much we can do for our customers. And some banks just decided not to participate initially. I think every day more and more banks are coming in under the fold, because the federal government has said, we're going to make you whole quickly. Last Friday, or a week ago Friday, on the 3rd, businesses could start applying. Last Friday, independent contractors, self-employed individuals, those that have their compensation on 1099s, were supposed to be able to start applying. The couple banks I talked to, just see what they were doing in that space, said they were swamped with the businesses that started coming in on the 3rd, and they weren't ready to start taking applications for contractors yet. That's it. They're supposed to be open. It's probably the same application, but we're not sure, because most of it's been oriented towards the employer with payroll. The last point on this is, as with anything, and part of the reason why Chris and the team have SafeWire, is there's such a thing as fraud out there in the world, and not everybody that looks like a good actor is a good actor. There's plenty of fraudsters, and be very concerned about anybody that's not a bank offering to help you secure one of these loans, especially if they start asking for information instead of just providing coaching or insight. So if they ask you or suggest that you fill out an application and send it to them, and they ask for the same type of supporting documentation the bank will, I'd be very leery of that, because they don't necessarily have an outlet to take that information to.
Yeah, this is going to be a thing where people are going to be defrauded by dealing with people that are going to start, you're going to start seeing ads run where, you know, it's $500 or $1,000 or $2,000, and they're going to do everything for you and get your loan approved, and it's going to be easy and da-da-da-da. Same thing happened in 2008 with short sales, where now you had all these short sale, as the government programs began getting launched, you had all these short sale negotiators who weren't realtors, they weren't attorneys, they were these companies. And a lot of them, you know, just went out in the wind after getting people to pay them hundreds and thousands of dollars. I would suspect you're going to see the same thing repeat itself here. So either deal directly with the bank, right, John, or I would imagine a lot of accountants are going to be offering services like this, as well as CFOs or planners like yourself.
Yes. One of the things one of the regulations is that somebody like myself cannot take a percentage of the proceeds and be a paid advisor by the proceeds that you receive. Now, if your accountant is on a retainer and they help you figure it out, and it's part of the retainer, that's fine. If you have somebody that's paid hourly out of regular operating expenses, that's fine. But part of this regulation is a third party cannot be paid from the proceeds of these loans. And that's one of the reasons. One of the reasons was, and I want everybody to understand that, because that's one of the ways to prevent fraud in this. If they are advertising that they're going to do it for a fee, and that fee will be paid out of the proceeds received from the government has specifically said that's illegal.
Mm-hmm. Good to know. Yeah, something to be a red flag for sure. So Dana Mack just made a comment that one of his buddies at a small community bank here has submitted over 450 requests in the last 4 days, which sounds about right.
Yeah.
I think what Chase said in the first, 24 hours, they had 1 million submissions or something.
$1 million. I mean, they had a lot of dollars. I think Huntington did last week in that 9 days, 8 days, Friday to Friday, was what they usually do in a year.
Yeah,
in number of applications.
Yeah, it's wild. It's definitely a cash grab.
Yep. I recommend, even if you haven't applied yet, it's not too late. As Chris mentioned, there's rumblings that this will run out of money. It certainly will. The question is whether the government puts more money into it. We expect they will. Right now, if you're paying attention to the games being played in Washington, of course, there are people that want other things funded at the same time. So there is a back and forth taking place as far as whether just this program has more funding or there are other things funded at the same time. But if you're not in already, I would still get hold of your bank and get in line. These are some of the things that some banks ask for. If you bank with Huntington, all they asked for was an annual payroll report. If you bank with some of the other banks, I have a couple clients that were asked for all the things that are on this page, which is why they ended up on the page. Most banks, you fill out the application and send it in. Huntington did it as a phone interview, and they completed the application. And that way they were certain it was complete when it was done. They treated it as though they had most of this information already in their files. Mm-hmm. And they said if they find that they need something after the loan's approved, they'll come back and ask for the trailing document later. So my point to all that is each bank is taking the general rules and applying them based upon their own willingness to take risks that they do or don't have all the information needed when the loan's approved. But I'm not going to read each line on this slide. The other things that I put in this presentation besides the government. So Chris, any other questions you have or anybody has submitted regarding the government cash? Because the last two slides really have to do with other things to do to protect your cash position or to improve it if you want to take these actions.
No, I think we're good. I think we covered that pretty thoroughly.
Okay. There are a number of places you can go to defer payments. One, the federal government has said that our tax returns and any taxes due have been deferred from tomorrow for a full quarter until July 15th. The state of Ohio, though I haven't heard a lot about it, if you go to their website, it says the same thing. I don't know about most municipalities. It's going to be individual by individual, city and village, etc. Of course, you can also ask for payment plans on taxes if need be. As I said, existing SBA loans are supposed to be automatically forgiven for 6 months. You can approach your utility companies for deferrals on utilities. I would approach your banks for deferrals on loans. Even if you aren't sure you need it right now. We don't know how long this is going to last. And the loan is one of the easiest things to do because the banks have been deferring, and in some cases they're actually making the offer before the phone call even comes in, but not most of the time, just some of the time. But all my clients that have asked their bank for some sort of deferral has received it. And some banks even have multiple options. They'll defer principal payments for 4 months and no new underwriting. They'll defer interest and principal for 6 if you provide them last year's financial statements or first quarter financial statements. So some banks will offer you an option. Same with credit cards, especially business credit cards. See if your credit card issuer will defer your credit card payments and negotiate, if you can, a favorable interest rate so you're not getting killed on your interest rate while you're not paying your principal. Many landlords, because they're getting the same PPP loans or deferrals on their mortgages, are willing to defer rent. But you probably have to ask, and it might require a negotiation. And many states are putting in place moratoriums on foreclosures and evictions.
John, so 2 things on this. One that you might want to add to your list would be, refinancing. This is a really good time to be refinancing because you get to skip the mortgage payment and potentially get a lower rate. But also, it's important, I think, too, to when we talk about protecting your cash, it is critical, especially as business owners. But there's a difference between these strategies and going into like a forbearance situation too with your mortgage, which you really, really want to tread lightly on. If you're thinking about trying to defer mortgage payments, before thinking about like a forbearance where you're going to have to repay that probably quickly, maybe think about a refinance.
Yeah, it's a great point. The second to last bullet talks about going after a new loan. If you have collateral that isn't being used on lending already, offer it for a new loan. But the refinancing is a great point also. If you have a line of credit, I recommend drawing it completely and then asking the bank to defer the interest. So you have full access to the cash and not have to pay interest while it's fully withdrawn. And then this is the last bullet on this slide and the next slide, which is if you can afford to reduce your salary and you need to preserve the cash, reduce your salary, but put on your own balance sheet that the company owes you money. It's a reminder to you, and it's also a good reminder to your tax accountant that you didn't take all your compensation that might have been showing up in the payroll reports. The other pieces, if you have the option to defer some maintenance, cancel subscriptions that aren't already paid forward, use a credit card instead of cash and checks, especially if you have a low interest one. Some corporate cards have low interest, personal cards tend to have higher interest. Go to American Express, get a card from them, and then borrow against it. They're a very good business lender in that regard, very competitive lending rates. If you need to, the next 2 are borrowings you can do against cash value in your life insurance programs or borrowing against your retirement accounts. Both of those can be done as long as your life insurance contract stays paid. You might never have to pay it back. I don't recommend it because that's against the cash balance that later on in its life is going to be used to pay premium. But in the short term, you can certainly borrow against it. And then if you need to suspend contributions to your personal retirement account, you can do that. And the federal government has relaxed rules on funding 401k plans for your employees at the moment as well, so that you're not in violation of fiduciary requirements on those, and you can suspend making payments to 401k plans as well.
John, I'm not the strategy behind the idea of protecting cash. It may mean something differently to you than it does to me as a business owner. What it means to me is that this is one of those rare opportunities coming out of a time like this where the government's saying essentially, keep your people employed. Here's some money to do that. If you're already in a strong cash position and you can get into a stronger cash position, and the market softens up a little bit, what it's going to allow for are really massive opportunities to double down on growth of your business, whether it's more market share, whether it's the ability to invest in assets that are now worth 10, 20, 30% what they were worth 2 months ago. These are the reasons to have cash. So I know that from my perspective, that's why we've done a lot of these things, is to make sure we're coming out of the other side of this cash strong, so we can, get a significant discount on some things that weren't discounted a few months ago.
Yeah, I think that's exactly right. And that works really well for somebody who's playing from a position of strength. I think there are some people that are probably running a lot closer to the vest from what they had on hand from a cash standpoint, and have bills due. These last couple slides had to have to do with manners and practices that can be done to soften the blow of really being tight also.
Yeah, makes sense. Cool. Well, what else should people know?
There's also most states have a small business administration of sorts, and they have programs that help the small business owner also. If you're in Ohio and workers' comp coverage is a monolithic state, Ohio is meaning Ohio issues workers' comp exclusively unless you self-employ. They declared last week and approved a dividend to which is equivalent to 2018's premium, the total amount that the Workers' Comp Bureau brought in. I have not read that means everybody gets back their 2018 premium. It means that what the Bureau is going to give back is equivalent to that. How they decide to divvy it up, I'm not sure. But that's something that you can count on from a financial standpoint. I learned this morning that in the state of Ohio anyway, they are going to allow people that are self-employed to apply for unemployment benefits. Most of us that are self-employed didn't pay into the unemployment benefit tax pool, but recognizing that there's a period of time that some of us won't have access to the PPP and our own incomes have been curtailed, they're going to make an exception and allow people that didn't pay in to be able to withdraw.
Cool. Well, that is certainly helpful. I want to let you folks watching who get a chance, you can reach out to John directly. His information was on the slide that I just showed. You can also reach out to me. We're happy to help and facilitate either through John or just through some of the things we've been learning so far as well. And if we can be a resource for your business, please allow us to do that. John, thank you as always. Appreciate you. And
Chris, thank you. Likewise.
Have a wonderful rest of your week. Thanks, John. We'll see you guys.
Thank you, everybody. Take care. Bye.